topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk 4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning, man. Another great Monday morning. You know, you get a weekend and you got things to get done. You know, that's what we all do. You know, you spend all week working your job, having your great adventure, working for somebody else, or even working for yourself. You know, you're out there working, you know, Monday through Friday, hard as can be. Sometimes you have weekends you've got to work and you get other days off. And then you spend your whole weekend cleaning. Yeah, cleaning. In our case, you know, we have this barn. We have an RV port, and then, of course, our garage. And when we moved in, the barn had plenty of room for everything and anything. And then we start building a small cabin on this property. And all of a sudden on the RV port, you've got sheetrock, you've got foam can sprays, you've got everything that contractors discard. And so, you know, what do? In our case, you know, we thought about just, you know, loading everything on trailer and making trips to the dump and everything. By the time we figured out the cost, we get a big dumpster out there. We had myself, my son, future son-in-law, my daughter, my wife, we're all out there working, getting things out of the barn and fill a complete dumpster. Took us both Saturday and Sunday to get everything clean. But now all of a sudden we've got plenty of room. As much room as we had in that barn as when we first moved in. So we have determined that we are just complete pack rats. We keep everything under the sun. You know, we still got toys from when our kids were young for our grandkids to come play with. Of course, we still kept all that stuff, but we got rid of everything else that we could possibly get rid of. If we haven't used it in 4 years, 2 years, 3 years, whatever that time period is, and some of it even dates back further than that, it had to go. So, you know, we had a great time doing that. It was kind of fun working with the family to get all this stuff cleared out and now have a little bit of room. We can actually drive the tractor through the barn. So we got doors on both sides. We can actually drive all the way through. We haven't been able to do that in a long time. And hopefully this will stay that way. You know, we all wish that when we're cleaning things up that it would just stay clean. But hey, that's not what you're here to hear about my cleaning weekend and cleaning out a barn. What you came here to talk about and listen and learn about is these Trump accounts and 529 accounts. You know, Trump accounts, these are tax-advantaged investment accounts for U.S. children under 18. You know, this was launched July 4th, 2026 under federal legislation. The program provides an initial $1,000. U.S. Treasury is going to seed that deposit for eligible children born between January 1, 2025 and December 31st, 2028. Hey, this is fantastic. This is U.S. government giving these children an advantage and a start with an investment account for their future. And as long as kids don't touch this thing can grow incredibly. If parents continue to contribute to it, it can grow even more exponentially. So, if you haven't done and set up your accounts, you can actually go to the Trump portal. So you can actually go to trumpaccount.com and you can log in and get set up with this account for your kids. Now, how are you going to do this? In order to activate an account, you have got to complete the IRS Form 4547. Hey, that's pretty cool, isn't it? 4547. Trump was president 45, and Trump is president number 47. Sorry about that. My phone was going off. We got to get that ringer off. So you can get that form through the irs.gov, and then you can elect to open a Trump account for your eligible children. To complete that form through the IRS website, you're going to need to verify your identity with ID.me. Set you up an account over at irs.gov. Not a bad thing for you. And it will help protect your information and provide secure access to IRS online account services. So it's really kind of a good thing. And when it comes in and you sign in, you got to go to that ID.me protocol, and it sends you a verification. So if somebody's trying to log into your account, it's going to give you that multi-factor proof. So if somebody else is logging in, it's going to ding you on your phone, and basically you're going to say, hey, that wasn't me. So that account will stay secure. And then once you get logged in over there, you're going to have to give all your kids' information. So you're going to have to provide dates of birth, contact information, social security numbers for both you and your child. And after you completed the IRS form, then you check out and activate the account. And so you're going to go through that process right there. Now, it does give you some investment options. So you don't have to be an expert at investing. You're not going to want to be investing in individual stocks and stuff. But the Trump account contributions will be invested automatically in a default exchange traded fund, ETF. And that's going to provide broad exposure to U.S. companies, allowing the investment to grow over time as those companies grow. All contributions are going to be automatically invested in SPYM, which is an index fund that tracks the S&P 500 by holding the hundreds of the largest U.S. companies. Now, none of this is guaranteed by the U.S. government, and you're subject to market risk. So if you're really adverse to market risk, you can also choose like a money market account that's going to earn money market interest. Right now, it's tracking around 3%, but that could go down. Highly unlikely it's going to go up unless interest rates continue to increase. Then it could go up a little bit, but it's there for you. And then after you've established the account and it's activated, and you've contributed, you can track all transactions such as contributions, the account history, all in the app. So they give you real nice ways of tracking what's going on. Now, what is the possibility of future returns, and how do you make this account worth more money? Well, they're going to show you some hypothetical examples. So, assuming your account starts with $1,000 that the pilot program contribution puts in from the U.S. Department of Treasury, and you make a just a $50 contribution. The child is a newborn when the contributions are made and allows 18 years for compounding growth, and your account earns an average of 7%. You could have as much as $25,048 for your kids. Now, there are limitations of what you can put into this account. You could put more into this account, and then it would be worth more for your children when they get older. And then they could use it for education, or preferably they can continue this account for their future retirement. Can you think about this for a second? This was 18 years, $50 a month, just $50 a month. It put $25,000 set aside with growth for your child in 18 years. Now, you may have started working when I started working. And, we were working out in the cornfields when we were 13 years old and getting paid. Albeit it was only maybe at that time $3 an hour. But, a lot of money back then to us. And then you looked at what they were taking out for Social Security. And so, if you're talking, $100 a week, and they were taking 7% out of it, it was $7 a week. But now, even if you are sitting there and making money and you look at what they're taking out of Social Security, and they're taking more like maybe $50 a week out of your check, maybe more than that. And over 18 years, think of what you would have had in your account if Social Security would have just been permanently in your name for only what you contributed, not even the match of what the company was matching, but you contributed. So this is $50 a month, got to $25,000. You're talking, $50 a week. That's 4 times that in 18 years. Now extrapolate that out to having even more income going in your name, and you're working 40 years. So with Social Security, you die, your spouse gets a small little check to say, here, we're sorry, and help bury you. If this was in your name, whatever was left in that account would be yours. Broken system, right? Yeah. So Trump accounts, 529. Hey, these are accounts that you are going to use for the future of your kids. Now, basically what we're talking about here, when you're talking about investments, it's all speculative. It's saying, hey, this is what the stock market would average. You can use those numbers. You're going to have some ups and downs. We've seen ups and downs in those accounts. We have seen also where you've had some small downs, but big ups, and you've had some big downs and bigger ups. Those who don't panic generally over a longer period of time are going to do just fine. Now, past results don't guarantee future results. We've heard this from investment advisors all the time. Hey, I'm going to tell you the same thing. Past results and what they show here as speculative is not a guarantee of what's going to happen. What is guaranteed is if you do these accounts for those children that were born after January 1, 2025, they're going to get that $1,000 into those accounts. So who can open an account? Authorized individuals such as parents, guardians, adult siblings, grandparents can elect to open an account for eligible children. If you're electing to open an account and applying for the $1,000 pilot program contribution, you must be an individual who anticipates that the eligible child will be your qualifying child for tax purposes for the year that you are making the election. So you've got to make sure you are going to be putting that child on your tax return as a qualifying child for tax purposes. So if you're the person that is claiming the child on your taxes, you're the person that can set up the account. And we've got a question here. How many accounts can a child have? Can a child have multiple Trump accounts? So can a grandparent, a sibling, and a parent all set up an account? No, only one Trump account may be opened per child. If the IRS processes more than one election, the first authorized individual to complete the account activation becomes the responsible party, and additional activation attempts for that child will be no longer eligible. They'll be kicked out. You're not going to get it. So you just want to make sure that if you are the responsible person, you are the ones that are going to file and claim them. If you're filing jointly, the primary taxpayer may be required to complete activation and serve as the responsible party. If the other spouse would like to serve as the responsible party instead, they can submit a new IRS Form 4547 in their own name and be added as a trusted contact on the account. A responsible party change process is also available by contacting customer support. So, if you are the primary taxpayer, but you want your spouse to be the primary on this account, you can actually go through customer service and have them added. Or you can just add them as a trusted contact on your account as well, so your spouse can see what's going on and also be the one that's going to help manage this account. We get questions on this account. My son, as he was setting up his account for his couple of kids and everything, he's like, well, who actually, Dad, who owns this account? Actually, the account is actually legally owned by the child, the minor under 18, but it is managed by the responsible party. So my son doesn't own the account, the child does, but it is managed by him. So your legal parent or guardian is going to be the person that manages the account. Minors are not allowed to manage the account until they're 18. Once they're 18, it becomes their account. They can do whatever they want to do with the account. It becomes their account when they turn 18 years old. So just remember, it goes to them as soon as they're no longer considered to be a minor. Now, who can contribute? We all want to know who's going to contribute money or who can contribute money to this account. And I'll tell you what, we're going to take a quick break. And when we come back, we're going to talk about who can contribute to this account on your child's behalf. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Who can contribute to these Trump accounts? You know, when these accounts began, July 4th, 2026, 250 years of this country, man. We celebrate, and first thing we do is give away money to kids for their future. But anyway, who can contribute besides U.S. Department of Treasury on behalf, I guess, of Trump and the government? Parents, you can. Family can. Friends can. There is a limit, though, of up to $5,000 per year to an eligible child's account. So you have a limit of $5,000. So you could contribute $5,000 a year as a family member. Hey, if you're a friend and want to give your friend's kids some money, you can help contribute to that as well. Grandparents, aunts, uncles. Instead of giving money when they're young to the parents to set aside for whatever, or spend on toys, which most kids have way too many toys at times anyway, you could take that money and put it right into the Trump account and be part of that $5,000 contribution that you could make into this account. So that's not a bad way to do it. Your employer can actually contribute up to $2,500 per year per employee. And that also counts towards that $5,000 annual limit. So if your employer puts in $2,500, you could put in $2,500 and then go from there. Other donors, they're set up, and it's really kind of interesting when we were looking at this. Nonprofit organizations, as well as state and local governments, can also contribute to these accounts. So if you got a nonprofit out there who's looking to do contributions, they could contribute to your child's account as well. The qualified class contributions, like from nonprofit donors or government, add that extra support to your account if they're going to do this, but it doesn't count towards the annual contribution limit. So, if you have a nonprofit or maybe state or local government that's contributing to kids, maybe they give some kind of money when the child is born, it doesn't count towards that $5,000. So you can still get up to that $5,000 limit, and they can contribute more money as well. So, nice little options that are out there. And, we used to set up savings accounts for our kids when grandparents gave money, or grandparents used to do U.S. savings bonds a lot of times. This would have been a nice place for the grandparents to put it for that child, for their future. And so instead of giving the $50 bond, they would put the money into the Trump account now. And then that money continue to grow until the child is 18 and can decide what they're going to do with these funds at that point, going to school or whatever the rules may happen to be then. Now, how do you contribute to this account? Your parents, your family, friends can make cash contributions to a Trump account through the contribution options right there in the app. Employers may also contribute through an employer contribution process, and that's going to come available soon. So it's going to be something that's offered through the IRS, I'm assuming, or the U.S. Department of Treasury, where employers can contribute to their employees' Trump accounts for their kids. Now, I'm assuming it's because they're limited to $2,500. If you happen to have 2 or 3 kids that are qualified for Trump accounts, then they would have to break that down based on equality for kids or something. I don't know how your employer would do that, but they'd be limited to $2,500 per employee, not per kid. Eligible children, they're going to have that automatic one-time $1,000 pilot contribution from the U.S. Department of Treasury. That does not count for the annual $5,000 contribution limit. That was coming from a government agency, so therefore it does not count. So, you can actually link other type of accounts. If you have a 529 or custodial IRA, you're not going to necessarily be able to roll over from those. But they are looking at linking your debit cards for account funding and stuff as well. And I'm assuming that's going to go through the app. All right. Is my money safe? Where is this being held? Your money is automatically invested and held in a dedicated trust account with a registered trustee, with all the security transactions cleared through the Depository and Clearing Corporation, the DTCC. This program operates in a partnership with the Federal Record Keeper and a banking partner. And then your child's contributions and investments are protected by the SIPC, which is insurance coverage up to $500,000 based on your child's information. Now, SIPC does not cover for market fluctuations. It only covers if they were to go under. Hey, Chad, I love this. Thanks for the question. Where did our government get the money to do this? Where does the government ever get the money to do something? Government money only comes from you, every taxpayer that pays taxes in, or adding to the national debt, which almost every program within the federal government adds to the national debt. So yeah, we like the program. We don't like where the money comes from. We don't like how the government spends money. If you go back and read oh my gosh, I'm on my soapbox. I know. Let me finish these thoughts. If you go back and read the Constitution, the government was supposed to be limited. Federal government. All rest of the rights were reserved to the states. Your state, my state, every state out there should be making decisions for the people in their state. The federal government should only be involved in protecting this country and interstate commerce. That was pretty much it. Wasn't supposed to be involved in the education. It wasn't supposed to be involved in Social Security, Medicare, welfare programs. All that stuff should have been left to the state, not to the federal government. Federal government, until the bad New Deal, was still very limited in what the government did. It wasn't until, I believe it was FDR who started some of these programs going through. And I may be wrong in my president, so don't quote me on the president. But, when we got Social Security passed, it became our first step towards socialism, redistribution of wealth. We're taking from everybody and giving back to the people, where it should have been, hey, what I contributed should have been there for me, not for everybody else. And the government should have never touched Social Security to fund the federal government for any way, shape, or form. Hey, great question. Way to get me started. We got to have a little bit of fun, when we're talking about these things, but we're talking about the Trump accounts and what impact is going to have. Yes, they're giving $1,000 away of yours money, my money, everybody's money. If you were born, you get it. If you were born, you get it. It's what it is. And right now, if you have a child that's born within these time periods, then, hey, take advantage of this, because it's there for your children uses for your children and use these accounts for the other. And because these accounts are in your child's name, these are not accounts that are in the government's name and not in the control of the government. So, Patsy, you had a great question. Our government doesn't manage money. How do we trust them with giving money to anyone? Hey, they give away your money and my money every day. And sometimes, you look at who's giving away the money and who's voting to not give away the money. And, the controls that have been on this money, which seems to be absolutely zip, zero, nada, that there's a lot of fraud in the government. I mean, you really got to think about this a little bit, is that how somebody that, wasn't making very much money comes into the government working in Congress, only making maybe 170,000 a year, within, 4-6 years become, a millionaire, where you and I can go out there and work for years. And even if we were making $170,000 a year, it would take us a lot longer to become a millionaire because we do have expenses and we do pay taxes. So how do they do it? The only question there is, lie, cheat, steal, fraud, insider trading, things like that can really be the cause for there. And that really becomes an issue and a problem. So, yes, the government doesn't manage money very well, but the good news in these accounts is that you are the custodian for your child's money. The account is absolutely in the child's name, not in the government's control. Gene asks, who gave them permission to control what money our kids get? Seems like this is another way to get more taxes from us. Well, they are not controlling these accounts. You are, if your kid was born within the rules of these accounts. What they did is pass legislation to set up these accounts for these kids, to give these kids a head start, to give these kids an advantage. Yes, people don't think about it, how much it's costing you and I to do it. But when things like this happen, you take advantage of it if you have kids that fall into this program and you use it to your advantage. You can set up a 529 account, education account for your kids yourself. And you can fund that $1,000 to begin with, and you can contribute to it and get to the same point for tuition. When our kids were young, we set up 529 accounts to use for their education, and we allowed that money to continue to grow. That money that we contributed to their accounts, along with scholarships that they got, allowed us to offset a lot of the cost of education because we were thinking about it and pre-funding it before. This is the same thing these Trump accounts are trying to do, but trying to get you or other people as a parent to think a little bit more ahead. Put a little bit of money to grow to help fund that education. Now, I'm not saying every kid needs to go to college. Some kids need to go to trade school. Some kids choose not to go to college at all. Hey, I don't always believe in the full education system of what they have going out there. We indoctrinate our kids way too much for way too many things and make them think of socialism and taking money from other people to give people money is the right way to go. No, it's called, helping people out and not continuing to keep them into a socialistic society. So it becomes a really, really hard thing. Kimberly, good question. How many desperate people are going to touch that money before the kids get older? So after the child is 18 years old, the strict block of withdrawals ends. So what does that mean? Distributions are restricted. Funds in the Trump account will remain invested and not available for withdrawal before the child reaches 18. See, great question. So that account cannot be withdrawn from until that child reaches the age of 18. And it can only be invested in eligible investments. So there are restrictions on this account. So note on this thing, after December 31st of the year, the child turns 17. No new contributions can be made until the child reaches the age of 18. And then the account transitions to a traditional IRA. Then it's up to the child. Well, he's an adult or she's an adult because she reached 18. May not be able to do everything else, but they're allowed to vote. So, there are restrictions on there, and those restrictions cannot be altered. Now, I have a great question in here from Lajera. What if a child dies before reaching the age of 18? Who gets the money? I don't know the answer to that question, but that is a really good question. We're going to have to look that up, and we can answer that question maybe next week in our show, right here in Tax Talk for You. By the way, we're here Mondays, 9 a.m. Eastern time, every Monday. So make sure you're here. If I'm going to be here, I expect you to be here too. We get the answer to that question. And then Heath is asking the question, do parents have to pay taxes on this account until the kid turns 18? There's no tax on this account. Remember, this is basically like an IRA. It just sits out there until the funds are withdrawn. So there are no taxes on the account or the growth on this account. And so it's going to sit there and grow tax-free. So distributions on this account are going to be the same, taxed the same as a typical traditional IRA. Earnings are tax deferred and will remain tax deferred until the money is eventually withdrawn. This means your child, nobody is going to be paying taxes on investment and gains on an annual basis as long as the funds remain invested in the account. So, you can't withdraw from the account until the child's 18, and then the child can. But as long as the funds is there, it's going to be tax deferred, meaning it's going to continue to grow out there and not have the tax out there. So if they were to pull money out and everything, then, you've got the same rules as your traditional IRA that's out there. So, hey, maybe, this isn't the great place, but this is a great start for your children to put money away for, their future, or you to put money away for your future. Man, imagine what would have happened if your parents would have done this, and then you would have been smart enough not to ever touch it. Now, I know many, many people had these wonderful life insurance as a kid that had cash value. And then your parents turned around and gave you this $20,000 policy that they got way back then. And it had a $5,000 or $6,000 cash value. And what's the first thing you did? I don't need life insurance. So you cashed it out. What'd you do with the money? You spent it. Maybe you put it into a new home, which would have been smart as your down payment. But I know many, many people who did that same thing as a youngster because they didn't see the value in it. Hopefully, they'll be able to see the value in this account and go, hey, this isn't worth touching, and not going after the money that's in this account so that they have the future for themselves and, be able to go that way and keep saving for retirement, which is part of the beautiful part about this, so that you can give your kids that head start. Maybe they're seeing you in retirement, maybe you're struggling, and they see that, hey, this money that they've gotten in here is a way to continue to fund this account and save so that when they go to retire, it'll be worth a lot more to them. And you would have wished your parents would have given you this kind of head start as well. It's just $1,000 the government's putting in. But if you can contribute to this account even more every single month, every single year until they are 18, and then they can continue to contribute to IRAs and other funds, it would be a glorious day for this country and for your kids to know that they had this kind of head start. Hey, we're going to start talking a little bit more about these accounts, what else you can use them for, and then we're going to start talking about 529 accounts, and we're going to do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Before we start comparing 529 and Trump accounts real quick, had two great questions here from Larry is, what's the cost to parents to activate or maintain an account? So let's just put it this way. There are no fees to activate or maintain the account, including when contributions are made or invested. So no fees. That is beautiful. Now the fund has fees, don't get me wrong, but it's being paid out of the earnings or the amounts that are in the account. Nobody else is paying fees out there. So, that's the big thing out there. So, no fees, no problems whatsoever. He also asked, can I switch this account to a different child? No, you can't switch an existing account from one child to another. The Trump account is legally owned by the child for whom the election to open the account was made on IRS Form 4547. Now, the one thing that I'm going to make a note here is I am pretty sure, because this is like a traditional IRA, you can set beneficiaries if the child was to pass away. So if it doesn't make it to 18, I'm sure there's going to be beneficiaries on there. I will verify that for next week show and talk about, what's going to happen if somebody passes away. Now, once they are 18, they can set their own beneficiaries because it is like a traditional and becomes more of a traditional IRA. So they'll be able to set their beneficiaries on this account, to whoever they choose, because it'll be their account at that point where they control, versus up until that point, your parent or guardian is the one controlling this. So let's talk a little bit about the differences between 529 and this account. This account, a Trump account, is for long-term investment for retirement. It's going to have the same rules and regulations that a traditional IRA will have once the child reaches 18. Now, remember, the one big rule on this account is nobody can touch it until the child reaches 18, meaning you can't take any withdrawals or distributions, no matter what the reason is. There's going to be no withdrawals or distributions from this account until that child turns 18. So got to remember that. The 529 plans and other child savings accounts, they're going to serve kind of a different purpose. The 529 plan provides significant tax advantages for families saving primarily for qualified education. And again, the Trump account is designed for encourage long-term investing for the child. And they have different rules and different withdrawal rules. And, sometimes those traditional IRAs are going to offer more for the child as far as withdrawals go for education and stuff. But we've got to look at what the rules are for that traditional IRA at the time that the child's looking to withdraw, because those rules do periodically change. Whereas a 529, it is specifically set up to grow tax deferred and no tax on that money if it's used for qualified educational purposes. So, you're saving in a 529 account specifically for qualified educational expenses. So now you may have a 529 account and you may be the primary as the parent, and you've designated for one child. If that child chooses not to go on for educational purposes, you can move that account to another child or grandchild. So you can move these 529. These are not exclusively dedicated to one individual. It's in your Social Security number as the parent or guardian, and then it gets moved as you see fit, withdrawn to pay for educational purposes, withdrawn to pay for things that you're going to have for education. And these 529 accounts and custodial IRAs cannot be rolled over into the Trump account. So, you are looking at some big differences. There's also a difference between traditional IRA and the Trump accounts. Traditional IRAs, the kids would have to be actually earning some income to contribute to a traditional IRA. But a Trump account, they don't have to earn anything. You can contribute on behalf of the government. James, here's his, I don't know if this is a question or not. Seems this is just more proof that the government owns us from the moment we were born and issued a Social Security number. Back when I was born, Social Security numbers were not required. I think it happened in the 70s that, everybody had a Social Security number. My original Social Security card says not for identification purposes, but you notice everything became a number. And your Social Security number is used on everything and anything. It's not what the purpose was meant for Social Security. Social Security was meant to be your safety net, not meant to be your full retirement. Wasn't meant to contribute as much money into this program as they have contributed today. It was supposed to be in a trust fund that started out that way, didn't continue. They use this money for everything, anything, and it is basically owed a whole bunch of money from the federal government because they're doing it. That's where the national debt came in, is they decided this money is here, it's ours to spend, and we're just going to spend it however we see fit, whether they are Americans or they're illegal, whatever the case is, they spend the money. Get back to the Constitution, get rid of everything else, and then let's balance the budget. Let's start from there. Well, when we're talking about these things, we're having a lot of fun, and time flies. We're running out of time here, but you got to be here every Monday, 10 a.m. Eastern time at Tax Talk for You. You can also follow us at Tax Talk, 4u.com. Follow us over there so you never miss a podcast. If you do miss it, you can go to iHeart, Spotify, Spreaker. There's maybe 40 different places that our podcasts are up at, and you can get our podcast over there. So if you miss us, follow us somewhere so you get all this great information. Best yet, be here on W4CY Radio, Talk 4 TV, and TaxTalk4U.com so that you're here getting this great information that we're going to provide. What I tell everybody is have a God-blessed and glorious week. Enjoy what you do. Spend the time with your family. Love the ones that you have. Hold them tight, because eventually when they leave the nest and get married, as our daughter will be, later this year. So be here, 10 a.m. Eastern time, right here on W4CY Radio, Tax Talk for you, and we'll see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.